Hello? In this video, I want to share a new position I'm entering, which is currently being fulfilled in two parts on Trader. The idea is that we're now around 4,550, 600, and it seems the market might take a breather here for a while. Based on this, I've tied a calendar diagonal combination. The calls for the calendar spread are at 4,600, and the diagonal is at 4,550, 60. The ratios are set at 1:3. Here are the screenshots of the executions. The credit spread was filled at 3.4 and the debit trade at 1.8. I bought 2 weeks into the position, with a relatively wide range. I deliberately left only 50 points between the two strategies so that the drop-off isn't too pronounced. So we'll see, there's plenty of time left. I'll continue from here. Alright, we're back now. It's the 27th. I set up this position on the 21st with the expectation that we'd be trading sideways, which looked quite accurate until yesterday. However, the FOMC decision was announced yesterday, and as expected, there was a 25 basis point interest rate increase. There was no reaction during the day yesterday. I haven't seen such a neutral day at an FOMC meeting in a while, but today there was a huge gap up, and it seems that everyone has realized they should be buying into the market. So what I did was buy a little more. I purchased more call calendars at a 4,650 strike, increasing the quantity of my diagonal. This has effectively stretched my range a bit, but this position is starting to get ugly, as both the 4,600 and 4,550 60ths are in the money. I didn't expect a jump with a gap up after such an increase, but it seems that the rise is currently unstoppable in the market, as we've moved from around 4,100 to 4,600 in about 2.5 months, or rather 2 months, since we were poised to break down at 4,100 on May 24th, and now we're at 4,600. That's more than a 10% rise in an index in practically 2 months, which is quite significant. It's entirely possible that there might be a retest here, and we might close this gap. It's absolutely possible. But I tried to widen the range, and perhaps time can open up this position a bit. I could close this out now with a minor loss, but I don't want to. I want to try and adjust it. I'll show a screenshot from yesterday, showing how much the position hadn't opened up before the FOMC meeting. The screenshot was taken at 1958 yesterday, and you can see it had about a $1.50-60 profit. It hadn't opened up at all in those 5 days, as the market had priced in the volatility because of the FOMC. Now I'll show the screenshot. The execution went through at 1.95 for the 4,650 call calendars. So, the position might be good now between around 4,680 and 4,520. Obviously, if it falls, this will move inward. And obviously the whole thing will fall. We know this precisely. But I wanted to stretch the range a bit to have a better chance of ending up in profit, as it's basically already jumped the distance I had planned for this position, so we'll see. I'll continue from here. Alright, we're back. It's still the 27th, and it seems I should have been a bit more patient with my adjustments after the opening, because as I mentioned earlier, we were likely to fill the gap. Well, we filled the gap as you can see, and since then the classic market teasing is happening. We're down to 4,540, so they've given back the entire range of the previous day. So I adjusted at the worst possible time, with this 1.95 which I attached here. If I hadn't done anything, it would look like this. Now since it's starting to approach the lower break-even, I sold 1/3 of the 4,600 call calendars for $2. This way, I've effectively pushed the lower break-even further, if, God forbid, the market changes its mind and we continue to fall. If we look at it on a daily chart, this is a rather ugly, engulfing, bearish candle. If we look at it on an hourly chart, a retest to the 4,530 area is realistic, which is still good for the position, as it's still positive around 4,530. However, if I hadn't adjusted it, 4,530 would not be so positive, and as we know, it's sinking, so it could easily climb this way. That's why I decided to at least close it out with a small profit, as I bought it for 1.8 and sold it for 2. So, I closed it with a very small profit. Now the next classic thing would be that we've now tested this bottom here, and tomorrow it gets bought up like crazy, and we're again above 4,600. That would be the absolute classic market teasing. In that case, I'll get rid of this position if tomorrow is again 4,600. Although it may actually do it some good, we'll see if it can even open up. So, basically here I tried to protect the lower part with this 4,650 I bought, which was a bit rushed, I think. I should have at least waited for the retest. I would have probably entered at the retest anyway, so I wouldn't be much better off. I wouldn't have bought it for 1.95, but for maybe 1.6. Now it's only worth 1, so this is how you can lose 50% in a day with options trading. I showed that even with a calendar spread, you can lose 50% if the spread moves against you so quickly. Moreover, there's still more than a week left in it, so this is quite a drastic devaluation in a matter of moments. And if we look at the VIX, it's a very minimal rise as it's up about 7%. But we're still only talking about a VIX of 14.17, which is quite low. So this was a poorly timed adjustment. We'll see what can be done with it. I think I might be able to get out of it at around break even. But what's the classic thing now? They've tested everyone here, taken out everyone, and then they'll pull it back, or not. Well, there are two possible outcomes to the game. It's entirely possible that we keep falling, even down to here. If we look at it in the 4-hour chart, the next logical level of fall is somewhere around 4,450. Obviously, this position won't survive at 4,450, so we'll see. I'll continue from here. All right, we're back. It's now the 28th, and this is exactly what I was talking about yesterday. This will be the real classic market teasing. Everyone was shorting here, and now a giant gap up and we're going up. We're already up 1.15%. If we look at the matrix, a huge gap up open, we didn't look back at all, not even a little bit tried to look back. We've almost filled the gap from the previous day. We'd need to go up to here. And anyone who shorted this breakdown yesterday, well, this is what happened. So this position, it looks quite stable now. Obviously, if I hadn't touched it, it would look like this. It would be in a profit of 159, but already in negative delta. However, it's only up by $70, $80, but the delta is still a bit neutral. So basically, I'm not going to touch this now, but I'll see how much it can open up early next week. Now that we're past the Fed decision, the GDP data, the PCE information, so basically we're past quite a few event risks. We'll see what next week brings. It's roughly in the middle for now, so I'll continue from here. So here we are again, it's now the 1st of August, and the situation now seems to be that the market is topping a bit. And what's interesting is the TNX, because if we look at the price action of the TNX, I'll show it on the other monitor on the matrix in a moment. The TNX has made a pretty serious breakout today. This is the 10-year Treasury yield, and the TLT has had a serious breakdown. I think in such an environment it might be a bit difficult to perhaps go to a new peak from here, especially in the next 2 days. That's why I thought that if we look at the SPX, we have this kind of topping syndrome here. Of course we can go anywhere, so I still can't see the future. But that's why I decided to close out another third of the 4,600s. I did this for 3, so the whole thing becomes a bit neutral but slightly negative delta, because if they buy it very strongly from here, that's not good, since I closed out, and nothing protects upwards. Here's the screenshot of the fulfillment for 3. I bought it for 1.8, got out of it for 2, and for 3. Obviously, if I hadn't gotten out of it for 2, it would look much better now. It could be closed. I'm now standing at a profit of about $180. It could be closed now, essentially. But I think it's quite possible that we'll move sideways a bit here. I showed the SPX here, and it's Tuesday now. This will expire on Friday. If they suddenly buy it very strongly and this turns into this area, I'll close out all of them, and that's it for the position. If they suddenly buy 100 points and I can't touch it, that's obviously not good. Now on Friday, there will also be a non-farm payroll which can influence this, so it might be worth closing on Thursday. We'll see where the market is by then. Right now, the diagonal looks like it's roughly at break even. It's like this because of the diagonal. If I close this at about 0, then essentially there will be one like this. Then of course I can still lose on it. So I would leave the diagonal for this reason, because if we collapse, then I can't lose on this downwards. Upwards obviously still, yes. Now I'm just showing out of curiosity or for learning purposes that if I now buy another 4,650 calendar upwards, which is quite cheap, then I could keep it at 0 downwards, but I would be protected upwards. Or I could even buy a 4,640. For 1.55, then there's a small loss downwards, but then positive delta upwards. I'm now thinking that I would like to keep such a neutral delta today, and then we'll see tomorrow. So that's all the adjustments that have happened now. I'll continue from here. So here we are again. It's August 2nd. The market drop has come quite quickly. So this sale yesterday, it was a good timing for 3, because now the 4,600s are only worth 1.35. However, this mattered a lot now with the 4,550, 560 diagonal, because this was about $4 yesterday. Now it's only 30 cents. So basically I could buy it back for this much and close the whole thing. And it would become risk-free down below, but up top the 4,600 and the 4,650 could still be left, which is practically worthless because you can see it's only worth 0.25. By the way, if I hadn't done anything out of curiosity, what would it look like now? There would now be a 189 profit on it, but now there is a profit of 244 on it. So you could do several things. You could close this out, and then with a positive delta, a little out of the money, hope that it will be worth more in the next 2 days. Well, I don't know. This is the big worry here. Last night Fitch downgraded America a bit. Not dramatically, but the market responded nicely to this, and the VIX is around 15% plus. So you could do this, or you could get out of the 4,600 for 30. But if the market changes its mind tomorrow and they buy everything immediately, let's say with a gap up, then this is ugly because it's going to sink. It will sink very drastically because there is practically a 100-point difference between the two. That's too much. It will sink a lot in the last 2 days. You could close this too, then my delta is clearly negative, so a quick pullback, that's not good. So I would rather think I'll wait a bit with it, because I really have no idea how much they are going to overreact to this. If we look at the SPX, we're now around a support level. So if we look at the hourly chart, then this is roughly, we've already broken down. So a lot of people could believe we're going down because we've broken down. This is usually followed by the next day going up with a gap up. Although this news is obviously not positive, and as I showed the TNX yesterday, the TNX has grown further. Now it's 41. It's about to break out. Let's quickly check that as well. So this is really not nice. It doesn't support, and we also had a peak in the TNX here, and now we're going in that direction. We know that a high TNX doesn't support a market rise. That's why I partially exited yesterday, of course. I could have sold more of it. However, if we look at the diagonal alone, it could appreciate nicely. If we only look at the diagonal, it now has a profit of 300 on it. But from this, not 1,000 but 600 could easily be possible in 1 day if the market doesn't collapse. But we stop around this level and the market thinks a bit. That would be nice. So I wouldn't rush to close the diagonal. I could exclude the 4,600. I'm just afraid that some crazy buying will come, and I could end up in a loss, or give back the air profit. Here I'm playing with giving back the 1.40, because it will be worthless if we stay around this level. Let's not even talk about the 4,650. It could be completely worthless. It's almost worthless now, so this was basically an unnecessary thing, but of course we can't see the future. But the close yesterday went really well, because if I hadn't closed, it would look like this. It would still be positive, but of course this 300 close, it did it good. So I would wait for tomorrow. Of course you can't lose on this anymore. Obviously, it would be nice if you could squeeze out another 600 from this. So I will continue from here. Here we are again. It's the 4th now. The last time I recorded a video was on the 2nd. Since then, the correction has occurred, and well, we are beyond the previous levels. Today they knocked it down again, filling the gap, and now they've started to push beyond the previous resistances. Now the big question is, how long is it worth holding this position? Because it can still appreciate a lot. If you look at it, the 4,550, 560 diagonal is very nice because so far it could have been taken back for a debit, and now it's already a 2.4 credit. At times like these, the other two can distort the picture quite significantly, and since they are basically worthless anyway. This one managed to drop to 0.25, and this one to 0.05. Therefore, it can sometimes be worthwhile to take these out altogether and see how the diagonal looks on its own. because the decision should really be made based on the diagonal. The rest is worthless. As you see, this has nicely come down from its peak since the opening. It now has a minimal positive delta. I wouldn't want it to overstretch, so this must certainly be watched. And at the beginning of the day, the price was around 0.9, now it's already 2.4, so it's worth paying attention to this. Of course, you shouldn't rush, let's say beyond 4,550, but it can still appreciate up to 3, maybe 4, but of course it will sink as well. So if you see something like this, there might be a 3, 4 in it, but it's clear that it won't become 8. It's very clear because it will constantly sink as we approach expiration, but fortunately neither is in the money, so it's not the sinking stage yet. So I'm looking at it this way for now. If I pull up everything, the picture is a bit distorted, and of course I only see how much profit it's in, but if I just want to analyze the diagonal, it's worth turning off the rest. Right now it's around a profit of 385. By the way, I have a closing order set for 4, a limit order, well, I don't know if there will be enough time for it, and what the market will do. Now, logically, where it can go after such a stretch is 4,550. That's perfect, so if it goes up to 4,550, that's ideal because even if it sinks further, I think it can still appreciate another 200. We'll see, there are still a few hours left. I just thought I'd check in to see how the position is doing at this point, and I'll continue from here. Here we are again. Currently, it seems like the market has bounced off this 4,540 level. We might test this level, the previous support or resistance, depending on how you look at it. So, because of this, I decided to close it out, managed to close out the diagonal for 2.5. So, if we look at the position as a whole, currently there's a position that still has potential, but it's very, very small, because there are the 4,600S, which I can sell for 0.2, and the 4,650S for 0.05. I'm showing a screenshot of the fulfillment. It just went through a few minutes ago for 2.5. So, basically, if I can't get anything more out of this, the profit will be $355. I've put this in for 1, but I don't think this will ever fulfill for 1. And this one definitely won't fulfill at all, the 4,650S. I could try it for 0.05, but I don't think I have much chance. So I'll check back in from here. I'll continue later. Here we are again. It's almost 8:30. And well, the last intuition was pretty good. This was a well-timed close, because now we are even lower at the bottom of the day, and there's still an hour and a half left of trading. Just out of curiosity, if I hadn't sold this for 2.5, what would it be now? Now it's 0.45. Well, yes, things change very quickly in the final hours. It would be a $200 loss if I hadn't sold it. But now, for fun, I also exited the 4,600 for 0.05. Here's the screenshot of the fulfillment. So essentially, only the 4,650 is left, which is completely hopeless. This will expire today. On Monday, there will be the 4,650 long call, also completely hopeless. So basically, we can say goodbye to this position. It closed with a profit of $360. Bye.